Hey, short sales, who pays? How much does it cost? What does it do to my credit? Why do I need a short sale? What's the difference in a short sale and a foreclosure? You're going to learn it all right here, right now. Hey, thank you for watching Short Sales, a little bit of information on short sales. So how much does it cost? Who does them? Why do I need to do a short sale? It's really simple. To short sell a property is when you basically, the mortgage company takes less than what is owed on the property. So right now we're looking at a little over 2 million people are behind in their mortgage payments. They've taken those forbearances. In other words, they have not paid their mortgage payment. And by not paying the mortgage payment, that total balance is going to come due. If you had a $2,000 a month mortgage payment and you didn't pay that mortgage payment for 6 months, you're going to have to give your mortgage company $12,000. So I have a feeling, and I may be completely wrong, but I've been in the business for 25 years selling residential real estate. I did a lot of short sales, helped a lot of people. And I just want people to know that what got me into short sales is I personally, the first home that I ever sold short sale, first home I ever short sold, was my personal home. I went through a divorce years ago, the housing crash, and to make a long story short, I had to short sell my own personal house. I learned a lot from that, but I always thought, you know what can I do that I've gone through this that I can help someone else? Because in my mind, we go through things in life and we learn from that. It's called wisdom. And so from that, how could I help other people? So that's when I took and got a designation, took a course, certified distressed property expert, to help people, as many people as we can. To start off, a short sale is just that simple. It's when the bank takes less than what you owe on the property. So what does it cost to short sell your home? It costs nothing. The mortgage companies pay a real estate broker to help you short sell your property. So you put your home on the market, you avoid the foreclosure, they don't take the property back. You're actually putting the home on the market and selling it. Doesn't cost you anything to do this. Now, how long does it take as far as the process to short sell a property? It takes typically 3 to 4 months to go through the whole entire short selling process. And the reason for that is there are investors within a mortgage company, because a mortgage company may just be the servicer of that loan, but there are investors and pools of investors that literally have to approve that. So it does take time. So I've been told 3 to 4 months to physically go through the short sale of the property. Now, during that time the home is being short sold, you can stay in the property. You live in your property. You do not have to move from your home unless you are physically evicted from the home. Now, how would you know when you're going to be physically evicted? Well, they have to do what they call serving you papers. So they'll physically come to your door, knock on your door, and serve you papers. From the serviture date that they serve you papers, and I can't speak for all states, but I know for a fact in Louisiana that you have approximately 70 days from the date you're served papers, and those papers basically show you specifically what day your home is going to be auctioned off, what day the bank is going to take the property back, and that's 70 days into the future. And listen, I've had people call me 10 days before their foreclosure date, and I stop the foreclosure because we get all the documents that we need. We reach out to the mortgage company. We have tens of thousands of home buyers searching for properties. We get a contract on your house. We reach out to the mortgage company, and they put what they call a stay. They stop the foreclosure. They'll do it typically in 30-day increments. Now, we don't know what the bank is going to take for the property because until we submit everything to them. And I always tell people when we submit all of that, you got to have a hardship. Well, of course, COVID's a hardship. If you didn't work, couldn't work, a death in the family, a divorce, cut back in hours, loss of job, those are the kind of things that really can disrupt you majorly, emotionally, physically, to get behind the 8 ball, if you will, when it comes to money. So another question that I have is people ask me, what happens to my credit? Well, your credit score is going to be dinged pretty good because once you are behind in your mortgage payments, and it may be, it's different with the forbearance. So if you're in a forbearance, and then now they're going to say, well, you owe us $12,000 or $10,000, and you don't have that. One of the things that you can do is get what they call a home equity line of credit, or you can refinance the property if you have equity in the property to pull some of that money back to bring those payments current, because perhaps you were out of work and now you're back at your job. So those are some of the things that you can do to prevent short selling. Listen, the purpose in this video is to educate consumers everything you should and can know about short selling your property. This video is not intended to get people to call me so that we can sell their property. It's to educate you so you can keep your property. The whole goal is to not to have to move. But if you're going to have to move, it's best to short sell your property instead of doing cash for keys or deed in lieu of a foreclosure. That's basically a friendly foreclosure. So if you don't want them to physically take the property back, now I can tell you what the government did, which was really a nice thing back in 2008 and 9 and 10, is they allowed folks that short sold their home to not be on the hook for the delinquent amount. So for example, if you sold your property for $200,000 and your balance was say $235,000, then the mortgage company literally would send a 1099 and you would have to pay taxes on that money as earned income. Well, they put a freeze on that so you didn't have to. So when you short sold your house, you didn't have to claim the money that you literally, because then you're going to have to pay more taxes. You're going to be behind the eight ball. I know all of this sounds absolutely absurd and crazy, but that's why I'm doing the video, is so we can educate as many people as we can, so you can share this video to say, hey, this guy down in New Orleans, he really does know what he's talking about when it comes to the whole forbearance and the short sales and what to do and foreclosure, not to foreclosure. So we've covered a couple of things. How long does it take? What does it, it hurt your credit? Your credit's going to be dinged, 100 to 120, 130 points. So if you're in the sevens, it may go to 6. You can buy a house if you're 620, 630 or higher, although you are going to have a short sale on your credit. But this is the way it shows up on your credit. It shows up on your credit that you had a mortgage balance with XYZ Mortgage Company, and that balance has been paid in full and satisfied. So to another lender, if you're purchasing a vehicle or a house into the future, it's going to show paid as agreed and satisfied. Now, what hurts your credit score is when you have 30, 60, 90 days late. That will hurt your credit score. I can tell you that, and if anybody's watching this or listening to this and you have had, you've done a foreclosure, if you can kind of chime in, like myself, I've done a foreclosure, so it took me a while literally to build my credit back up. My credit score was always 800, high sevens, low eights, but it took it down substantially. So in doing so, it took me a while to build that back up. But I always tell people, 2 years, you can purchase another house. I mean, if you're watching this and you know someone, and this is kind of off the subject, but it still relates to foreclosures. If you foreclose on a home, you can typically purchase it takes years to be able to purchase another property. If you file bankruptcy, you can literally purchase a property a year after your discharge date, 1 year after your discharge date. With a short sale, you can purchase a home 2 years after your short sale. So it's not the end of the world. It can be stressful. I can just speak from experience that it's a very humbling experience, but it's not the end of the world. Nobody's dead. Nobody's dying. Nobody's bleeding. It's just, it's all sticks and bricks. It's a house. We make it a home. The benefits to short selling is they're probably going to have it to where they're not going to come back after you for the deficient amount. It's not going to be taxable. What happens to the credit? How long does it take? You've got to be served papers in order to be, removed from the house. And a lot of people say, well, what about my mortgage balance? I only owe $180,000 on the home. Well, here's what happens. Once you're behind in your mortgage payment, and let's say you're behind in your mortgage payment 6, 7, 8 payments. What they'll do is they'll tack that on, plus penalty, plus interest. And then once they go to the foreclosure process, they hand it over to an attorney. Now, attorneys are going to have to charge a fee, and their service to foreclose is quite expensive, and it's on a percentage basis. So what the mortgage companies do is they roll all that into your new mortgage balance. So now instead of owing 180, you probably owe 212. No exaggeration, I've seen all of this. And so you think, well, I've got 180, I can sell the house for, gosh, about 210 and have equity. But I encourage people, call the mortgage company and ask them, what is your payoff? What would it take to pay them off totally in full? Not your balance, not your current mortgage balance, nothing about your balance. Ask them for the payoff. What would it take to pay it off in full? That's the number that they're going to want to see the day of closing. And that's what you have to shoot for. And it may be, we've had a very small percentage, but we have had people that they're in a positive equity enough to where they can sell their property and don't have to short sell their home. They can actually sell it, put a little cash in their pocket, go rent something on a temporary basis. Another option would be to have an investor buy your home from you, and you physically can stay in your home, rent your home back, and then perhaps purchase it back into the future. So there's many ways that you can, should I short sell? Should I not short sell? I personally can speak from experience. I short sold my home because I didn't want it to be a foreclosure. If you have a foreclosure on your credit, it may take, and listen, all of this information and all this stuff and all the rules and everything changes literally on a monthly basis. But as of right now, it takes years, like 4 or 5 years, to build enough credibility back with a mortgage company or a bank to say, look, I'm in good standing. My credit's good. I've been good, but they're still looking like, well, you quit on yourself and your family and your house and everybody just by letting the house go back. That's the way they look at it. And so you're a high risk. And so the best way to prevent from being a high risk is to short sale and not foreclose. So I hope you've enjoyed this video. We try to do as much as we can to educate consumers with real estate transactions, and short selling being something that I think is going to come back to a head, if you will, here really soon. So I'm Wayne Turner. Thank you for watching. Hope you're having a good day.